G'day and welcome to the Investor Motivation Podcast. My name's Rob Gowdy and I've got...
Rachel Todman.
G'day Rach, how are you?
I'm well, how are you going?
This is our first podcast for 2025.
Yeah, it is. I've been a bit slack, but...
We've all been a bit slack, but we are chatting about a really important topic, one that we're really noticing amongst our client base and the new people that we're speaking to. And what's the topic, Rach?
Financial procrastination. So it's a big pitfall for people. I know for me, with things that I don't enjoy, I procrastinate a lot.
Yep.
Not financially, of course, but with things in general. So it's a common theme for people to, with their finances, put things off for various reasons. So today we'll, have a bit of a chat about what those reasons may be and also the impact on the now and, the future. Yeah,
because definitely the decisions that we put off has significant impact years down the track. So when we're talking about retirement and, the decisions you make in your 20s and your 30s or the non-decisions.
Yeah. That's
the procrastination.
Procrastination.
So where does procrastination come from? What's probably one of the main causes, Rach, in your view? What have you seen amongst your client base?
Probably the overwhelm and overload of information.
Yep.
It becomes there's too many choices, too much noise out there. So then they just get that fear and do nothing.
Right.
It's just sort of becomes too much. It's like the elephant in the room, and they just, I suppose, back away. So
right. Can't see the was it the forest for the trees?
Yeah.
That type of stuff.
And of course, social media, like everything, we're slugged with so much information, so many opinions. Who do you trust? Who don't you trust? So this investment, that. So it's leading to people to just freeze and essentially do nothing.
It becomes too hard.
Yeah.
Okay. And no doubt I've seen that myself, that the people on social media, and we are those people as well. Talk with such a high conviction that it's, who do you believe? Everyone's so confident that this is the way, this is the path, and anything from beyond, not that, to what they're spruiking is wrong. And now there's clearly there is a cost of delay, isn't there? As I said, the decisions that you make in your early 20s not to save the deposit because you procrastinated or you got distracted by
something shiny.
Cryptocurrency might be for that generation. The decisions you make in your, once your home loan's paid off, to start the next, phase of accumulation and or using some of that money for fun. All these things lead up and affect retirement at the end of the day.
Absolutely. And even, delaying saving for retirement is one thing. Like people, they think about it, but they don't take any action. And therefore, all of a sudden, they find themselves in retirement and, they're limited with the things they could do.
Absolutely. So the cost is huge. We're talking hundreds of thousands of dollars, not tens of thousands of dollars. So probably from what I'm seeing when I'm chatting to people, that given that you think about all the strategies, so in our game, we will talk about salary sacrifice, we'll talk about superannuation, we'll talk about non-superannuation. If it's a lot of money, we'll talk about investing to trusts. Then there'll be the people talking about debt recycling, margin lending, leveraging, using your equity.
You're hurting my head.
And it can keep on going. I can keep going. There's just so much.
There is,
And everyone talks with such conviction. For me, what I'm very proud of as our industry and ourselves as advisors, that with all that noise, we definitely have that ability to cut through and show them the path, and then also prove the path. But who do you know who to listen to, Rach? What's your thoughts there?
Well, I think for me, I think finding out what you value, what you actually want to achieve from it, because all of a sudden, if you're going in with sort of a wishy-washy plan of what you want to achieve, then the noise is just going to get louder. There's going to be even more options. So, trying to stay in your lane and keep focused and not get distracted. Finding someone that's aligned with that you do trust. Like, just because, you might meet with a financial advisor and not click, that's okay. There's, you can explore your options as well. So it's, finding that person that you trust, that doesn't overcomplicate things and speaks to your level as well.
Yeah, and something you mentioned before we started our chat, we're prior to hitting record, that you've got to know what your values are and what you're trying to achieve. So at what sort of level do you mean by that? So goals, objectives, or values?
So it could be, I don't know, values are, they're not based on time. So goals are timeline sort of things you set to achieve, whereas a value is a little bit, it doesn't have a time sense to it, but it can be things like I value time with my family, I don't want to stress about money, all those types of things. So which is probably a lot of people's, but they're the things that you value that will keep you motivated and interested as well in what you're doing and make things stick. So if you start to not lock in what you value, so retirement and such amount of time as well, then I feel like, as I said, the noise just gets louder. The voices just, you see property, you see shares, you'll see Bitcoin, and it just becomes a mess.
Right.
So finding your way first, I think.
Cool. So knowing what you're trying to achieve, and then, and so that might be, retiring at a certain age on a certain income, but then finding the direction on how to get there in the best possible way that fits your profile as an investor, your risk tolerance to how much debt or not to take on.
Yeah, absolutely. Yeah.
Very good. So obviously that, and this is obviously a huge part of that. We want to know what we want to achieve, and we've got to find the best way to get there. And obviously the overwhelming choices that we've got out there, and many of these choices that I see when I'm watching social media, like everyone else, and I know my algorithm has definitely gone down the property spruiking path, and the reason for that is because I like to see what falls out of their mouth next, which is so utterly conflicted to sell a property to the next person they can. I think it's important to understand what motivates the person you're listening to.
Yeah, that's right. What's in it for them as well.
Correct.
Yeah.
So it's something I've definitely brought up in the past that, say people that sell property, property spruikers or whoever, are in the business of selling property. The people that are selling the mortgage, the home loan, make the money out of the home loan. So I think it's important to understand what motivates people to, steer you down a certain path.
What their biases are as well.
Correct. Biases and also conflicts of interest. I'm not saying that these people don't believe wholeheartedly in what they're doing, but you need to understand, I suppose, the risks and benefits, and also what are the options. And I think this is where financial advice can definitely provide a more balanced view. There's more than one way to skin the cat. Yeah,
absolutely. Another reason that people procrastinate is they've made a mistake in the past, so they've got that fear that that'll happen again. So they're worrying about losses and things and not moving forward in that way as well.
What if I make an error?
Yeah, what if I get it wrong?
What if it's a big error and it just puts me so far behind?
Yep.
Terrific. Now, obviously, limited financial knowledge. Obviously, there's just so much to know. There's so many traps and pitfalls. Do you think that's something that really stifles people from moving forward?
Absolutely, yeah. Too much information overwhelm.
Yep.
I think, it's really important that we do educate ourselves to make that decision. People are leaning on us to give them advice.
Yes.
But I think we pride ourselves a lot of from them actually understanding the why as well. So choosing who you trust, they should educate you to give you that knowledge, so then you can make that decision as well. And that'll give you the confidence, hopefully, not to procrastinate and make some of those decisions with confidence.
Because money's not just about the numbers, Rach. It's about there's a big emotional side to it, and like one client, and I think you were in on that appointment, it's about the feels, isn't it?
Yeah. 100% it is.
And so what I mean by the feels is obviously from an emotional and psychological point of view, and one way our business are great advocates for making sure there's good cash reserves. Because that just means, that good cash reserves, we call that clients, that's their what was the term
A
we've used?
fluffy pillow.
Yeah,
a client once said to us, it's
Yeah.
their fluffy pillow at night. So,
It makes them sleep well just knowing that there's a good amount. And that amount is different for everyone, but I think the knowledge, knowing that you've got your soft, fluffy pillow there, is, that helps people relax and then hopefully can clear the path to make decent decisions.
Yeah, and speaking about emotions, that has such a huge impact.
Okay.
I was reading that 80%, some stats are all different, but 80% of financial success is from the psychological side of things as well as the investment. So
Right.
making sure that, if you're not self-sabotaging, so if things are looking good or, again, you're procrastinating, so it's not always about just the numbers, it's about, how you handle yourself in situations. Again, not taking risks because of something in the past or, so stifling yourself from, an emotional point of view as well.
So, to I suppose, an example of that, self-sabotage, what's a good example of that, say, in the share market, Rach, would you say?
Would be... hanging on to a loss that you've got. So you're just fixated on just that one business that hasn't performed as well.
Yep.
So then it's just tainted your view forever, and you're just
Right.
not prepared. So I'm selling down everything. I'm just running off fear.
Right, or I'll keep that one at a loss. I'll wait to get back to where it got to.
We all hope for that, don't we?
Yeah. So there's no doubt, we've spoken about this at length on different platforms, that investing in the share market is, half of it is the psychological and emotional game. It's not just the numbers by far. And when there is a crash or correction, I can guarantee everyone that it'll be 100% psychological and emotional. The decisions you make at those times are vital, and this is where a financial advisor with some decent experience around that point, it's absolutely gold for you. Very good. So economic uncertainty, that's really interesting, because a lot of the questions that I'm getting now is, Rob, what do you think about now that Trump's in? Trump's in. Rach, hey, what do you think about now that Trump's in?
Actually, I don't know what to think about him. He's just a loose cannon, and he threats a lot of things too. So you sort of, I don't know, sit back and watch. But the businesses are going to continue to do what they do. Obviously, there's going to be hurdles along the way. There always is. We've seen it in the past. We'll see it moving forward. But I'm just saying, you just stay in your lane. That's business as usual. For now.
Now, of course, the media is going to pump up, obviously, the Trump impact and talk about the effect of inflation and all the potential downside and bad news. And that is just going to, I suppose, build on that uncertainty and, I suppose, anxiety for some people that, well, we can't do anything. We need to let things settle down, or we need to wait till the market improves before we invest. So you need to be mindful that the media is not going to be helpful for anyone at those times of uncertainty. In a crash or decent correction, the media will pump up the bad news, and that will lead many people into inaction. And when I cheekily said, I'll wait for things to improve, I've physically heard that in my office more than once, where people say, look, I'll just move my money to cash and then I'll go back in when things feel a bit more stable and improve. And my answer to that, it's only been asked a few times, but it happens. I said, okay, so you'll get out now while it's down, and then you'll get back in when the market has then gone back up. So we're selling low, and then you were telling me you were going to buy high. And
there will be another significant event that will pop up, which will make them feel the same way. So, different. There's always some big event that's going to happen and create fear for people.
So, those times of the obviously higher levels of uncertainty, where people procrastinate, where there's the most fear or most anxiety around their investments, is generally going to be probably the best time to invest.
That's right. When it feels wrong,
so
it's in reverse, isn't it? So, and I think having that person that you trust is so important, to be a soundboard through those times as well.
Yep.
When things are looking grim. Just to sort of get a different opinion, different insight, and calm you through those times. But again, it's finding someone that you trust and is educated in that space. It's not going to a barbecue and getting the best share from whoever. It's it's leaning on the people in the industry.
Yeah, if we're talking about, I suppose, non-professional investors, and there's plenty of good non-professional investors that have done particularly well in the markets over a long period of time, but what we're seeing now, markets globally are at all-time highs. The inflows into products, ETFs and managed funds, are at all-time highs.
Yeah.
It always coincides that the markets have ran up particularly well. Now everyone is piling into the market. No doubt it's potentially the wrong time to be throwing huge amounts of your money in right now.
Yeah.
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 So this is investor psychology, and it just plays a massive part. What other topics worth having a look at, Rach, and discussing that we think is valuable as we go through our show notes?
Probably one that people do or come across is they ignore their debt and procrastinate on that a little bit. So avoiding credit card repayments, loan repayments, opening bills and things like that.
Right.
So not what we see in our office, but around, there's things that are around there that things seem heavy and hard, so they just push it aside as long as they can. Then all of a sudden the credit card's blown out. You've got no additional payments on your mortgage. So again, procrastinating instead of taking small actions to keep on top of it.
I understand that. We had a chat to a client a couple of months ago, and there was high debt levels and there was very high income, but cash flow was tight, and I said, does any of this stress you? Mm-hmm. And he goes, no, not really. I just choose not to look at it. And so that is clearly...
There you go. That's exactly that.
Yeah, so that was the do nothing plan, and with his very high debt levels, there was risk in doing nothing. It was definitely risk to him emotionally, because he had his head in the sand.
Yeah, exactly. Yeah.
So avoid budgeting. Is that worth a chat about? And I suppose we're not talking about budgeting down to the coffee cost point of view, not down to the nth degree, but budgeting what goes into your super to reduce tax, what goes into your home loan to have it paid off at a certain time. We're talking about the big picture budgeting.
Mm-hmm.
Does that, for the majority of people, not happen because of they're procrastinating, or they don't want to put that cash flow pressure on themselves, or they just don't know how to do it?
All of the above. I think probably the main one would be not knowing how much to put into super, not having the budget at a household level to enable them to divvy up the funds to that. That's often ignored. I think while budgets are good, I know people think they're boring, which they are, but having again that direction of what your minimum expenses are that you need, then that can help you do things like how much you've got to invest, how much you can put into super. That's the core of everything. How much you can put in your holiday account. So I definitely think that budgeting is boring, but it also gives you the ability to do the other things that are important.
Yep.
And work out how much and stop some of that procrastination as well.
And it probably relates back to what you said earlier, Rach, around you've got to know what you want to achieve, those bigger goals and objectives which are aligned with your risk tolerance and your ethics and so on. If you know what when you want to retire, what your income in today's dollars might be, that gives us something to work towards. And probably, from what I've seen, for the most part, that is beyond most people's skill set to be able to calculate all those things out.
Yeah. And they're busy just raising families or just living life. So it's, people just get busy and then have good intentions, but either procrastinate or forget about it.
Yeah.
So,
and that said, I know I said at the start, but that's the part where I feel as though that we provide so much comfort for people.
Yeah.
Again, and I think it's, with all the options that are available, that we cut through the noise, we show show a course of action, recommend a course of action, and prove that as well, based on what the client is looking for.
Yep. Even the simple things like reducing debt, showing people increasing their repayments by a similar amount, and watching the years drop off their mortgage. Even those sorts of things are are powerful.
And Rach, you said watching debt reduce over time, which can be done on a monthly basis by taking there's big picture planning, but there's small actions in between, isn't there?
Yeah, and people procrastinate because they're looking at thinking they have to tear up everything and make it complicated, but you can just gradually do those little things that you're speaking of.
So set the grand goal. I want my home loan paid off by X. That gives me enough time to then do something else. But what does it take to do that? So that takes lots of small actions. Fantastic. Very good. Building financial knowledge. Obviously, we're big fans of educating here in our office, and we try to, with all the noise out there, you can spend literally days, weeks, months, years listening, understanding lots of little bits. And I've had those client appointments where, hey Rob, what about debt recycling? Should I be salary sacrificing? Yeah, but what about fixed interest and government bonds? And
you're like, whoa!
And it just goes on. And they just wanted to have a crack at everything. And this is where that is probably not the ideal client for me, for us. But we definitely can show them here is the path.
Yeah.
Fantastic. Very good. So once you've defined your goals, and this is about, I suppose, once we've worked out what might be a direction, and this does not need to be complex. Out of all the strategies out there, none of this needs to be hard. Budgeting, personal finance, can boil down to some very simple actions.
100% it can.
And I think what I've been doing of late, and why I've been trying to explain it, that there is essentially 4 pillars, and I'm thinking perhaps the wealth accumulators coming up to retirement, so there might be a few less pillars for those that are pre-retiree and
already nearly there.
Or in retirement. But for that young family, the debt, the higher incomes that we're seeing out there, that first pillar is your home loan. How do we tidy that up within a acceptable time frame and pay less money to the bank, less interest? Then there is superannuation, how that is invested and what contributions go in. Then there is potential for non-super investments, pillar number 3. Then there's the estate side of it, making sure life insurance is up to date, estate planning, wills, powers of attorney are all done. And then the 5th pillar, which is one of the most important, do the other 4 line up with having fun?
I was going to give you a 6th pillar, then I'm like, where's he going with this? I'm like, if he doesn't say having fun, then it's going to be on.
Having fun and getting the balance right now. You knew I would not miss that, because it's there's no point of saving for some point in the future that never turns up.
No,
so,
that's right.
So that 5th pillar, in my view, is, does all that line up? And
it's got to be the core of any plan. It has to be the core. And then, how do you get there? Because again, if you don't have this upfront foundation, then nothing's going to stick. We can give you, any client, a plan.
Yes.
But if it's not with what they value initially, then it's not going to stick. They're not going to follow through with it, or it's going to be a chore. They'll lose interest. So, exactly that.
And quite often our strategies will not revolve around debt. So it means that we're going to reduce debt, and savings plans, if it doesn't quite fit with the 5th pillar around the balance, and our children are only children once, for what in hindsight is a short amount of time. You only get that once. So if what we're doing here doesn't quite achieve that balance, that we're looking after your future self but it doesn't align with the present, then we can tweak things. For the high debt strategies, which is negative gearing and buy one property then another, and you keep on rolling with more debt if you can fund it, the debt will not be so lenient to be able to say, okay, well, let's just change this non-super investment or superannuation contribution strategy.
Yeah.
Things can be tweaked to make sure that we get the balance right.
Yeah.
Cool.
100%.
Summary and final conclusions, Rach, all yours.
Final conclusions, well,
Well, it doesn't have to be.
Yeah.
We can say that was enough. And
that was enough. No, I think as we all know, we put things off and that we, like I said, don't enjoy or it feels too hard. So it's really, I guess, pushing ourselves to deal with the hard.
Yes.
And having the hard conversations, making the hard choices, I guess, which don't have to be that hard, but just starting, just doing something, picking something small that you want to change.
Yep.
And evolve, and don't bury your head in the sand because it will impact the now and also down the track.
Yep.
So
Cool. I would recommend people absolutely where they are. Obviously, they can't see the forest for the trees. It is very noisy, and you just can't see what you need to do. And there's just too much opinion. We've learned that we can see through and have that helicopter view, and we see what people need to do.
Yeah.
And the nice part about, I think, in the financial advice community, it's about educating people to help make their own educated decision. If you know what you're doing and why, then you'll feel comfortable to go ahead and then take, with help, the small actions that will get people there.
Yeah. That's right.
And ultimately, build memories to reduce regret when we're too old to do anything about it.
Too true.
Too true. Thanks, Rach.
Thanks, Rob.
Where can people find you on socials?
TikTok and Instagram mainly. So just under Rach Todman.
Rach Todman, excellent. Please check out our YouTube channel, which is Investor Motivation. There is 730 videos there, so that's been a labour of love since 2012. People can find me on Instagram and TikTok, and if anyone's got any questions or topics you'd like covered, please let us know. We're keen to cover off the topics that are important to you. Thanks, Rach.
Thanks, Rob.
Thanks, everyone.
See you guys.
Bye.